Boom! We are alive, ladies and gentlemen. Thank you all for joining us on another fantastic episode. This is Tio with the Arcane Bear. I'm grateful to have you all on the live stream already. As you can probably guess, we're going to be taking a look at Bitcoin and Ethereum, the two market leaders of the crypto sector. Now, one of the reasons why we show up every day, well, first off, consistency is always valuable, but more importantly, the learning process happens on a day-to-day basis. So every day that you wake up, there is the opportunity to go through, learn more, and discover. And Bitcoin is one of our market leaders. So what we want to do is basically roll out and take a look at Bitcoin. So what we're going to do is we're going to dive in and we're going to look at the charts. Let's see, make sure everything is going through smoothly. Yeah, okay, everything does look like it's going through smoothly. So you should be able to see our charts on the screen now. This is Bitcoin on the 4-hour, a little messy. I can get rid of our momentum indicators. I can get rid of the crypto vac too. Just get rid of data. Although it is helpful, and we will maybe add some of that back in there. What we want to start off by remembering is that we are always looking at these horizontal trading ranges, and our primary support was here. Our first buying climax was here. Our first selling climax was here. And now what we're looking for is the spring. Now, the spring is usually highlighted by a significant amount of volume coming in, usually fairly similar to the primary shakeout. As much as you can see back here, this was a large amount of volume and supply that did come in, and the very limited reaction that had in terms of price spread. So it's too early to say that this is the spring. Now, if we had a bar of volume, that came up this high, then I would suspect that that was the spring. But for now, we saw phase A, again highlighted by the buying climax and our primary support. It looks like we're still in phase B, which is basically somewhat of a decline of volume and volatility, which we are currently seeing here. Now, we've gone over the idea here with Bitcoin prior that the spring could do something like a fake out to really kind of scare people. And maybe even we've seen big shakeout springs before in other tokens that we've watched. I've got two other tertiary lines drawn at $25,000 and $24,000. The reason these other green lines are down here at the bottom is because they represent my kind of guesstimate of where that 21-week moving average might be that I would like to see as a kind of a retest to really solidify where we are in the markets. Because we haven't had that yet, I'm still waiting for the spring in phase C to show up. So right now it's too early to say what's going to happen. Some of you guys have been asking me about, well, is this distribution? Distribution usually has an upthrust in phase C, the opposite of the spring. And it is also usually characterized by a massive amount of volume of buying, very similar to a wick or a volume candle that we would have like this, and a very limited price spread to the upside. Now, we don't have that yet. And the other important part is to remember we're in a bull market. You know, if you've ever studied Jesse Livermore and you know some of the people that we like studying, one of the things that he learned, or that he at least reiterated that as he was learning, being in a bull market is an overall trend. So right now the trend is still bullish, right? So we should remain bullish until that trend changes. Now, because we're only in phase B and have yet to see phase C, which I do believe is going to be a spring, not an upthrust. Again, the upthrust is basically the exact opposite of the spring. It is characterized by high amounts of volume and limited price spread to the upside like this. But I think we're about to see the opposite, which would be a spring to the downside. Massive amounts of sell volume would come up and very limited price spread on the downside. So I'm still ultimately bullish for Bitcoin. There are multiple reasons for that. We've gone over in previous videos, and we can even take a look at this now. Glassnode is, wait, hold on. Is everything going smoothly, guys, in the stream? Let me know. Yes, okay. So the other important part here is the amount of the scarcity of Bitcoin on the open exchanges. On a day-to-day basis, if you continue to watch this, the exchange's supply is diminishing. So currently the current balance on Bitcoin, the current Bitcoin balance on open exchanges is diminishing. And just last week, around December 30th, when we had one of the first big runs here, you saw another like thousands of Bitcoin basically leave the market, tens of thousands of Bitcoin leave the market all at once in almost every exchange. This to me is a characterization most likely of large institutional buyers who have the capability to buy from the open market using smaller bots and algorithms without really upsetting the price movement too much, and then taking it off the exchanges. The other important characteristic of that was actually the amount of Bitcoin there is on wallets. So the addresses with over 1,000 Bitcoin has again been doing nothing but going up. If we get even closer here to the last few months, just so you can see, since basically again December 27th, the first rise up, look at the amount of Bitcoin wallets that have over 1 to 2,000 Bitcoin. And on average, they're around 2,000 Bitcoin. So just be a rough estimate here. If you want to know how many wallet, like, okay, so 2,000 Bitcoin, right? Times around 40,000. Let's go, we'll aim a little high. It's about people who have $80 million in Bitcoin or more on their wallets has been dramatically increasing since December 27th. This is a huge characteristic that the bull market is not over. We are still in the early stages of this. So again, it leads me to believe that instead of an upthrust, what we're going to see is a spring action as well. Now, this looks like a very classic characterization of a reaccumulation range. So again, for those of you that are studying with us, these reaccumulation schematics, this is kind of what I'm expecting, a schematic one where you do have a dip below resistance, the spring like this, before the final backup phase comes above and breaks out. Now, I do believe Ethereum is actually going to be leading that. Now, again, sorry for the messy charts here, but we will take a look at Ethereum. We are starting to see what I believe is the backup phase. So Ethereum is in a different reaccumulation schematic. I should always clean these up before I jump in, but I like watching on the smaller time frames to learn. So what I believe we are witnessing is actually known as schematic 3. And again, you can find this stuff for free on the internet, but we do produce our own private educational materials. Phase C in schematic 3 is actually characterized by the spring above the box. So a little bit contrary to what you might think, but here you can see, look at the amount of supply coming into the market right now above the box. This is, I think, what we're about to see is the spring. And I believe we're probably going to hover around in this area maybe for a week or two. Now, if we start to break above this imaginary line I've just drawn here as the top of the trading range above the box, again, very similar to this, you have to remember that this is the spring. So what we're looking for is a characterization of volume pushing down. And we've just hit the POC last night. I've triggered some of my first buys on my leverage long for Ethereum, which is around 1280. So that's nice to see. Just this kind of simpler strategy on the long term, I think, is a really valuable way to play. And for those of you that are, again, just spot buying, we are in the early stages of a bull market. Even though we're really high up, we've got a lot longer to go. We just started. Now, there is something to be said about cyclical time and the nature of that cyclical time. So it is very likely that through springtime, as the sun starts to come out, people start to get used to a new president. And I don't want to talk about politics, but I'm just being like the ease of people's acceptance of whatever's happening in the nature of the markets starts to cool down. The volatility index, another great factor here so we'll jump into the volatility index just again to kind of highlight my sentiment. We've actually been below the rising channel on the volatility index for quite some time, and we've been mellowing out. So we've entered this very small thin range. People are getting used to this type of nonsense in the markets, and the more comfortable people get, the more likely that markets will continue to go up. We can use the S&P as another way to kind of look at this same conjecture, which is how are the broader markets feeling? And look, the broader markets are actually feeling quite positive. I believe that the broader markets entered a schematic 3 of reaccumulation as well. And as you can see, we had drawn, are we going to get a backup phase here? And we have. And not only have we gotten a backup phase, it's been a rising channel of a backup phase. I would like to see a spring below that box, and then we're probably headed to new all-time highs for the stock market as well, which will bode extremely well for the rest of our sector. So again, we had our primary support, our buying climax, our primary shakeout, and then our test. And then this is actually our spring, again, highlighted by this volume. And I do suspect we will actually see a few more big volume springs come in, equivalent usually to the shakeout, which is categorized in phase B. So I think we just entered phase C. So phase A, phase B, and I believe we just entered phase C and on our way to phase D and E. And now phase D and E are the exciting ones. Phase D is usually highlighted by a really significant drop of that volume in terms of what the spring represents. So I think, again, the spring or phase C, again, on the schematic 3 is above the box, not below it. This is one of the strongest reaccumulation patterns, which means it's a very bullish pattern And you can kind of see that sentiment when you look at Ethereum, or when you look at Twitter and Ethereum. Everybody's like, Ethereum is going to $2,600. And when you have that many people agreeing together, it kind of becomes a self-fulfilling prophecy to some degree or another, because what you end up having is all the people that are holding Ethereum are not willing to sell it. They're moving it off the exchanges, and that volatility leads to the upside, really driving Ethereum's price higher. There's also some really interesting sentiments about the potential of burning gas fees. So making Ethereum effectively a deflationary model, which would increase its economic purpose to some degree or another. So we're in for a really unique thought about what Ethereum might be able to do in terms of price discovery. Again, guys, I don't think necessarily that Bitcoin is the be all end all. In fact, I'm very positive that that's not the case. While it does solve one major problem, Ethereum offers us all these new solutions, and there are many other protocols, right? I've made conjecture about, well, look, you've got HTTP, HTTPS, FTP, IMAP, POP3, all these different protocol layers that make up what we call the internet. And if we're looking at the potential new internet of money, it's not going to be just Bitcoin. That's almost entirely, that's insane to think, right? Okay, sure, a lot of it uses the TCP/IP protocol, but not all of it. Right, there's a vast amount of the internet that functions on a completely different layer. And this is important for many reasons, is to look at it from that broader perspective. It just gives you a clearer idea, and it also allows you to think in longer terms and bigger time frames. So again, I do suspect that Ethereum is going to shoot upwards of around $2,600. That's where the final regression line is for me. So this huge reaccumulation range that we're seeing right now is a shakeout of a lot of retail investors. People that bought here, got scared, sold here, and now they like rebought back here, and then now they're going to get scared here. They have no idea what they're doing. That's usually what these large volatile ranges represent, is retail traders, or at least weaker hands. And that's not to say that weaker hands are always retail traders. They're often big institutions. Big institutions have deadlines to meet for taxes, or they've got people wanting to pull money out. It's a whole bunch of things that they have to go through depending on what type of fund and how they manage their capital and their risk, etc. So keep that in mind, that weak hands doesn't just mean retail. It can mean bigger institutions and investors as well. Again, especially since if we go back to Bitcoin and we take a look at if we go back to the March days of Ethereum. So what I'm going to do right now is we've got Ethereum open. Haven't changed charts, but March is a really important part because March represented the spring. March was the phase C of our last trading range, again highlighted by a significant amount of volume, but very limited price spread. Now, the reason why this is important is because this was the absolute bottom of the market, and the moment that the bull market started was right here. You want to remember that moment because it'll become important in future history, which is basically that you're looking for when there's blood in the streets or peak chaos in the human psyche. That's usually the best time to start buying in undervalued assets. And as you can see, every moment since then, we've started to go up, and the dramatic increase of that up has continued. So I do not believe the bull market is done, but more importantly, look how simple this is. Let's measure from the bottom of the wick to the top of the wick. You have a 1,700% gain for Ethereum. But if you go over to Bitcoin and we do the exact same thing, we measure from the bottom of the spring, which was effectively March 11th, the day the WHO declared an official pandemic, although they were way too late, personally speaking. I think we knew that the pandemic was coming in January, but what do I know? And you measure Bitcoins, that's only a 10x. So if you have Ethereum up at a 17x gain and Bitcoin at a 10x gain, you don't need to be a brilliant investor to understand that if you had been purchasing Bitcoin and Ethereum on a day-to-day basis, Ethereum outperformed Bitcoin already from the spring to today. And that's really where you should be measuring the market from. Anyone who is not measuring the market from the spring doesn't have a clue where they are in the market. They're just making stuff up. Look, this type of mentality has been around forever because human nature has never changed. The reason why the spring is highlighted by the moment that the WHO declares a pandemic and everyone starts to lock down, flights stop around the world, nobody knows what's going on, there's a novel disease, there's videos of people falling over in the streets. That is what we call peak chaos, and it is always represented by the same thing, and it is the psyche of the investor being shaken, and at this point it was all around the world. This spring actually effectively existed everywhere. Even if you look at the S&P 500, look at this. March 11th, kabing, and every day up after March 11th, you're talking about 76% in S&P 500, basically boring compared to Ethereum, right? So again, Ethereum from the spring to today is around 16 to 17x gains, or 1700%, and Bitcoin trailing behind at around 10x or 1000%. Now, gains are not everything, right? The smaller market caps will have an easier time growing because there's less of a market cap for it to have to go through. To go from, say, 1 million to 2 million versus 1 billion to 2 billion might be a little more difficult. It really depends on how much investor sentiment and demand there is for each of these. So back to the smaller time frames of Ethereum, as we can still learn one or two more things for the day. I do suspect that this backup phase is going to be almost identical to a phase 3, schematic 3. So I think we're probably going to do something like this. We're probably going to fall into almost like this ascending type triangle before we finally break out into phase E. And again, this is what you're going to see here is a dramatic decline in the volume spread through time as well. So at the bottom here, you can see that we had our first big chunk of volume come in, again representing what I believe to be the start of the spring. But then you're gonna notice the declination of that volume, and again the declination of the volatility within that spread as well. So Ethereum, in my mind, is actually in a much more bullish setup than Bitcoin, at least temporarily, because it's closer to that breakout. Whereas Bitcoin, we don't yet have the spring, right? So on Bitcoin's price range here within our horizontal trading range, we haven't seen the spring. Now we could make again a conjecture here on the 1 hour that we're starting to witness the spring because there's a bunch of volume coming in, but it's just not enough to really highlight the characteristics that I'd want to see, which is volume that should almost be equivalent to the primary shakeout that transitioned us from phase A into phase B. So generally the shakeout in phase A should be of similar volume, character, and profile to that of phase C, or what we're calling the spring. So these are all really helpful moments to study and be patient. You know, one of the things I try to recommend to everyone is that, look, go read books, okay? You're basically looking at time on deck. Dwayne "The Rock" Johnson did not get ripped overnight. It took a lot of time every day invested into hitting the gym and really earning those gains. And investing is no different. You can't expect to just jump in all at once and make life-changing gains. Although that can happen, that's really luck. And if you're interested in luck, I do suggest listening to Naval Ravikant's podcast on how to get rich without getting lucky, and read any of Nassim Taleb's books. I also suggest reading Reminiscence of a Stock Operator, which is probably the highest rated book for any early beginner trader. It's a fictional story about Jesse Livermore, who was not a fictional character. He made hundreds of millions of dollars in the 1930s shorting the stock market. A lot of his educational kind of quotes and understanding of market psychology are extremely important, because one of the things that gets in the way the most of the average investor or trader doing well is the fact that you're a human. So if we go back to this moment when we're looking out on the daily and we recognize that, look, on March 11th, when the WHO declared a pandemic, what were you doing? Look back to that date and ask yourself that question. What was I doing in that peak scared moment? Because you know what the big operators do? They basically turn off their human emotions, they sit down at their trading desk, and they start accumulating assets that are undervalued and hit the bottom of their supply at that particular moment. And that is how you make extraordinary amounts of capital. Now, the other way to do it is through venture capital. So we've gone over this a few times, and venture capital is, let's say, something like Aave, Band, Avalanche, any of the number of DeFi players that have done extraordinarily well. Now, I'm a big fan of Avalanche because the technology, from what all my technology friends tell me, is absolutely amazing. And as you can see, as we hit our primary spring here, we had a massive breakout and a huge run. A little bit high up to be wanting to take a position here, but we're talking about 420% in the last 45 days. This is absolutely astonishing amount of power. So venture capital, I generally look at a little bit different than our market leaders, right? So we've got our market leaders, Ethereum and Bitcoin. They're doing very well. 17x is nothing to shake a stick at. That's a huge amount of potential, right? It's a massive amount of capital. that's really worth your time and energy to focus on. You don't need to be looking for, oh, what's the next 100x altcoin? The people that try to sell you that generally aren't venture capital investors, or they probably don't even know what the word means. Venture capital should be looked at always as asymmetry. And this is why I suggest reading Nassim Taleb's books, because asymmetry functions, again, through time. It's almost like a volatility through time equation, very similar to options, which is you almost have a binary effect of it could be worth nothing or it could be worth 1000x. So when you're building your venture capital portfolio with things like Avalanche and as we accumulate Aave, Polkadot, the others that I've added to my DeFi bag, this I put under the idea of venture capital, which is again, I'm not using leverage for these plays because there's just way too much volatility in the markets. It's too early to be doing so. It just doesn't make any sense. But through time, over 10 years, let's say I've got Avalanche, Aave, Band, and Link, right? And let's say 3 or 4 of those fail. And you put $1,000 in each of those, but 2 of them go up 1000x or 100x, right? Those 2 make up for the other 3 that were total garbage failures. And that's the best way to look at venture capital, is again, asymmetry through time, which is again, very similar to like a binary option type focus, which is it could be worth a massive amount more or nothing. And this is the way the venture capitalists have always played. If you look at the way Gary Vee makes investments, or I guess Nassim Taleb, although he was much more focused on options specifically, not venture capital, Naval Ravikant also with AngelList focused specifically on these venture capital plays. You're looking at asymmetry and volatility through time. So you really want to limit your cap investment and play through that time and use it to your advantage. So thank you guys for joining the first part of our show, because these are all live streams. I try to segment everything we do into 2 parts. The first part is the valuable data that I want to give you about where we are in the markets right here, right now, so that everyone watching it later can enjoy that. And then the second part of the episodes are going to be the times where I jump in and we start taking a look at the live chat and we go over your guys' questions and your guys' thoughts about where we are in the market, so I can hopefully build conjecture and we can all learn more about that process. So during this time, give us a thumbs up if you guys like this content. Thank you guys for joining us today. If you're new to the Bear family, please hit that little bell button and subscribe. And remember to hit the notifications area as well. That way, when we go live every day, you will get that notification and you can join our live streams. My main focus here has always been to try to communicate as much value as possible, because I'm learning and I don't know everything. That's very clear, I don't know everything. I like to share this because I actually get better at what I'm learning if I can then articulate it to you guys. So this is a participation part of the show. So again, thank you guys all for joining us. I really appreciate your support. We have over 648 people on the live stream right now. Again, give us those thumbs up. It will help other people later on down the stream. And go ahead and share the videos. We are so close to 30,000 subscribers. It's like a big milestone for me. So again, if you guys are new, please subscribe. And let's dive in and take a look at what's going on in the chat right now. So I'll leave Bitcoin open on in the background so we can kind of watch it as we're chatting. And I'm just going to start with the more recent questions. So if you guys did post questions 10 minutes prior, I'm not going to be able to see them at all. HBAR, okay, we can take a look at that. I do know one of our private members was trading HBAR. That's an interesting one. Should I buy at 420? You should definitely do something at 420, but nobody can tell you what that is. That's up to you. Just buy ETH Bitcoin, they go up as many as any altcoin. That is absolutely wrong, Mike O'York. So actually, let's use this opportunity to prove Mike O'York wrong, because he's wrong. And when you're wrong, someone should show you why you're wrong. Okay, so we've already gone over that Bitcoin did a 10x since March. Ethereum did a 17x since March. But let's just prove, what's his name? Let's prove Mike O'York. Let's prove Mike O'York wrong. Okay, so this is going to be fun. Mike O'York, thank you for being the guinea pig. I don't mean to single you out. I do hope that you learn something from this idea as well. And remember, that's what I'm doing, is I'm learning. So I'm not just going to follow blindly something that someone on the internet says. Let's go back and backtest what Mike O'York says, which is just, oh, just buy these two because then that will do the best. Well, that's not the case. Okay, so we take our main conjecture, we go back to March, and we put $1,000 investment in Zilliqa now instead. And you measure from Zilliqa to the top of the wave, and lo and behold, what do you have? 39x. Okay, so see how you were like 3 times, or like 2 times wrong there, basically, Michael York. So you weren't even just a little bit wrong, you were like a lot wrong, okay? And that's really important to understand. Let's say, again, take a perfect example. You put $1,000 in Bitcoin at March 11th, $1,000 in Ethereum at March 11th, and $1,000 in Zilliqa on March 11th. And what do you get? You today from Zilliqa are sitting on a $31,000 gain from Zilliqa. You on Ethereum are sitting on a $13,000 gain from Ethereum, and with Bitcoin only a $10,000 gain. So no, it is absolutely wrong to think that just invest in Bitcoin and Ethereum is going to provide the highest yielding results, because it's not. And this is one of the interesting thoughts about venture capital, is a small amount of money can make a huge difference, right? Again, $1,000 and this is if you could have bought the exact bottom. Like, there's no way you'd ever be able to do that. It's just kind of conjecture for understanding the percentage potential. Let's even measure from the bottom of Zilliqa, like on a range, and you're talking about $24,000 from that $1,000 investment, or a 24x gain, or 2,415%. So again, these are monster moves, and there is in no way a way to rectify that. So let's do another one that we've gone over previously, which is Cardano. And shout out, I think we're going to have Charles Hoskinson on the show soon. So thank you guys all for helping out with that tweet the other day. So we do the same thing with Cardano. We measure from our spring right here, March 11th, effectively the day that WHO declared the pandemic. And remembering why that's so important is because it represents the psychological breakdown point of the human psyche, and where most traders go wrong. Instead of rushing out to buying toilet paper, you should be rushing out to acquire undervalued and underappreciated assets in the height of people potentially dying in the streets. So here with ADA, basically from the spring, you're sitting on a 16x gain, almost equivalent to that of Ethereum. So again, we can't think so boldly of saying, oh, just the market leaders. Now, market leaders are a safer way to go. Right? A 10x gain is still like monstrous. It's not like, I'm going to scoff at a 10x gain from Bitcoin. No, but we need to at least have some clarity in what we're doing so that we can understand the difference between these investments based off March, or again, the psychological spring date. This is a really important exercise to do, and it can be done multiple times in any industry. Now, let's take a look at Band. We'll just consistently add even further to the conjecture here. Now, again, you would have had to sold at the top for what I'm about to go over in Band here. But let's say you entered Band at the very bottom of March 16th, and you sold at the top 8,000. Okay, so only 8,000%. And like, I love how that sounds small. Wait, hold on, ladies and gentlemen. Let's see. Here's exactly the point that proves Mike wrong. I'm sorry, Mike, not to pick on you, but your sentiment here is just incorrect. So I wanted to highlight it. If you had entered Band on March 11th or February 2nd even, and you rode it to the top and you sold pretty close to the peak, let's even go mellow to the peak, you're talking about an 8,400% gain, which is an 84x, okay? That is an order of magnitude higher than Bitcoin's gain. So if you put $1,000 in Band at February 2nd, and you got out even remotely close to the top, you're walking away with an $84,000 play. There is no way that you can compare venture capital and longer term stable investments like what Bitcoin is represented, which is through time, the volatility decreases, the amount of price potential gains decrease because you have a much bigger market cap. And therefore, for the market cap to go from 100 billion to say 10 trillion gets slimmer and slimmer because you need that much more buying power to really produce those results. Whereas Band, if they only needed to go from 1 million to 100 million to get 100x gain, it's much easier for them to do that. And that's important to remember because, and this is real, I think this whole opportunity here really represents the highlight of venture capital and the asymmetry through time that we were just talking about. So it's really important to do this kind of stuff and really do your own. I mean, you guys can go prove this yourself. It doesn't take a genius investor. Like you don't need to be a maximalist here. You just need to go measure the gains. It's pretty simple. It's like, oh, look at, it's so cut and dry. This is a fact. You can't argue it. No, Bitcoin's better tech. It doesn't matter. If you would have put $1,000 in each one of these ones that we just went over, Band would have produced $84,000 from the $1,000 you put in. Bitcoin would have produced $10,000 from the $1,000 you put in, roughly speaking. right? And this is, again, this is if you were able to hit pretty much the exact bottoms. We're like, to some we're like over personifying anyone's ability to play the markets, but I think it's a fantastic example to show that asymmetry through time. So I see you guys are asking about DOT. We can do the same thing with DOT. Although, do we have data for DOT up to March? No, we don't. Okay, I'd have to add another version of DOT here to take a look. DOT on Tether. No, that's the one we got. DOT on Kraken. Is that going to be long enough? I don't know. We'll find out here. I'm not even sure if DOT's been around that long. No, DOT has not been around that long. Okay, so again, the downside with DOT is you don't have the data of the spring, so it's almost not worth it. And you are only up 430%. So in terms of December to date, DOT's done great. But in terms of from March to now, DOT has been a loss effectively, because if you had entered at the very early days of DOT, you were still at a loss, effectively speaking. If you entered at their like initial, then again, I don't know, how much did DOT offer in private sale, and what were the costs, and how many people? It's a much larger question. So again, if you're comparing these, DOT actually isn't even on the board, because we would need data from March, which again would represent that peak psychological breakdown moment. If DOT wasn't released up until August, it doesn't really fit. And not only that, it only did 400%. So although it's actually produced great results in the last month, it's absolutely nothing compared to what BAN did from February. Even from February till now, BAN's sitting at 4,800%. You know, that's still 4 times higher. Again, orders of magnitude higher than what Bitcoin did. So yeah, again, it's really important to remember that there's a massive difference between the way we look at these, and it's provable data. Like you don't need to believe me. You can just go chart it yourself. There's no need to argue about tech or who's better. The charts and the markets speak for themselves. That's it. Okay, cool. There's a bunch of questions you guys have asked. What do you think of Whiteheart? I'm not sure. Ren, please. We went over Ren yesterday. We went over GRT yesterday as well. I like this one. Can someone just buy an god-awful amount of land and create a country based on blockchain and crypto? I agree with this. You know, one of the things that's funny about Americans is that Americans didn't fight for Britain to become a better place. They just left Britain, right? So I think you might see something similar, which is the revolutionaries, the entrepreneurs, the people that want to find less regulation. They might just leave America, or United States, to be specific, because America is an entire continent. And I don't want to sound like an idiot. They might leave the United States and go somewhere else where there's less regulation and build somewhere new. But that's a really hard and long process. You got to remember that took like 200 years for the United States to make decent progress. It was like the Wild West for the first 120, 30 years. You had all sorts of horrible things going on in the country, I'm sure of it. Let's take a look at a few more of your guys' thoughts. Cardano is another pumped up smart contract with another decline. Yeah, see, Michael York just doesn't have experience with understanding the importance of in trading. That's all. Mike, if you can't really recognize the difference between an 84x gain and a 10x gain, you probably should be doing something else with your time, because it seemed to have gone like, hold on, I've got a sound for this. That's what I believe. You should probably do something else with your time, Mike, because you seem to miss the entire point of trading and investing as a venture capitalist or as a good investor, because percentage gains don't seem to like click in your brain. So please recognize that. Samo23 says, should I start to work full-time in crypto and blockchain? Well, if you're a programmer and developer and you're not playing in this sector, or I don't know what you're doing with your time, but if you're not already skilled enough to be here, you should probably continue to do what you're already doing that's making enough money so that you can continue to invest, because it's really hard to start new careers unless you happen to be good at that. So yeah, we're actually, because I don't know a lot about Cardano, guys, we're going to shout out to Charles Hoskinson. We're going to get him on the show. I really like this idea of helping solve identity and governance issues. I really like what the blockchain sector can do. I am totally agnostic. I am solely interested and curious to learn more, because I don't know anything. But one of the plus sides is I can at least tell the difference between a 10 and an 80x gain. That's all and that should be a pretty simple thing for most people to understand, I think. I love that sound. Yeah, we've got a few of them. Look at this. We've got this one too. And this one. Anyways, just messing around, kind of playing. Shout out to Elgato for this cool stream deck. It allows me to do fun things, like I just hit this button, and then you guys will see in the channel there, this is like, subscribe, and share. It shows me the live viewers right now too. Oh, I can tell you about our memberships just by pushing a button too. It's super cool. In 5 years, won't Ethereum consume all Bitcoin? Very interesting question. You have a serious amount of potential in Ethereum. And again, as a venture capitalist, I'm not smart enough to know. And that's why I try to make investments in the sector as well, not just in one and be like, yeah, this one thing is going to like kill it. I'm not smart enough to know that, but at least I'm smart enough to know that I'm not smart enough to know that. I think that's a pretty valuable line to take as an investor and to make broad spectrum bets. Right? Again, if you had put $1,000 in all 4 tokens that we've looked at, Band would have outperformed all of them. Who would have thought? By like, again, orders of magnitude, not even a little bit, like a fucking huge difference. That's so important to remember. Is it too late to buy DOT? Again, if you're building a venture capital portfolio, the best way to look at your entry into something like DOT or Avalanche is that you only need a really small amount of money and you need to think about velocity through time. So it's never too late. I mean, here's the quote. The best time to plant a tree was 20 years ago. The next best time is right now. And a lot of what people don't do when investing is just pull the trigger and say buy like $100 worth of DOT and not think about it and walk away. Because what if you walk away from Band from 5 years from now, it's up another 1000x. And that's really the way you should always look at venture capital, is volatility as asymmetry through time. That's how all venture capitalists have worked to this date, and it pays off enormously because you can get 7 out of 10 wrong, get 3 right, and pay like orders of magnitude higher than your original investments. That's really, really important to think about that kind of stuff. Nice. Crypto Truth Angel says, I only just arrived, so far not sure if I like this content. Well, that's great. I'm not really sure if I like you. It doesn't really matter, I guess, right? Go somewhere else. It's quite unimportant to me what you think. You're the only one YouTuber who's honest, direct, and transparent. Thank you. Hey, actually, which reminds me, Christian, I do remember that some of you had given a super chat yesterday. So as back to my original sentiments, what we're going to do is we're going to highlight Kiva, which is a nonprofit organization who gives no APY loans to underbanked and underserved entrepreneurs around the world. So right now, you should be able to see Kiva. We've loaded up our account with another $100 because you guys gave us $40 yesterday. We're going to go in, we're going to find a woman, maybe a group of women to make a loan to. They're the most responsible and don't usually default on their loans because people like, what was his name? What was this guy's name? Crypto Truth Angel. I don't really trust him. He's probably not likely to pay a loan back. Most men aren't, actually. It's a different story. So instead, what we'll do is Kyrgyzstan, a loan of $1,200, buys dairy to help increase the sale of her milk to local factories. Let's take a look here. Boom, 4-star field rating. We're going to make a loan of $50. Again, Kiva is this fantastic option to help underbanked, underserved entrepreneurs who could never get a loan like before this stuff. So if you go in, this is Akela Storia. She's 50, married, has a daughter. She has secondary education. She's been engaged in animal husbandry and field cultivation since 1996, and it's been her main income for her family. Thanks to her hard work, she has 2 cows, a horse, and 2.5 hectares. Man, she's got more land than I do. Way to go, Akela. Anyways, she has a local contract with the factory supplying organic milk to further processing in the dairy. She needs a loan of 1,005 SOM, which is like $1,200, to purchase dairy cows to increase the sale of her organic milk. Again, this is an entrepreneur who would never be able to get a loan because she doesn't meet the bank qualifications. She doesn't have her proper identification. So we get to help her out through Kiva because yesterday you guys had made $40 in super chat donations to us. So we'll proceed to checkout. We'll give $7 as a donation direct to Kiva to help manage all this stuff. And, oh, why am I not logged in? Okay, one sec, guys. I don't know why. This is more than once this has happened where it like automatically logs me out. Let's go back. Let's try to do this quickly. Log back in. Okay, there we go. Complete order. Take Akalia in Kyrgyzstan. I can't even say these things. Nice. Thank you guys again for supporting the Arcane Bear. I really appreciate the fact that we get to do stuff like this. It means the world to me. Like, one of the main reasons I started this channel was so that we could do this. So if you guys want, also follow me on Twitter. And what you can do is you can actually join our team and make loans together. So there's been a few of you already who have joined the Arcane Bear team. And on your guys' side, this month alone, we've made $1,700 in loans through 18 different team members that have joined. And we're ranked number 2 for all businesses on Kiva. So again, remember guys, these loans get paid back and it gives us the money so that we can go out and reloan it to more entrepreneurs. I believe helping the underbanked and the underserved is one of the most important things that we can do with our time and energy in this sector. So again, thank you guys all for joining us on these kind of endeavors. I hope you guys got to see that. Again, shout out to Akelia for her fun, good luck on continuing to grow your cow farm, I guess. Okay, back to Bitcoin and some more of our charts here. Just kind of thought we'd have a fun little interlude there. Back to the bottom. John on Terrible says, I've been watching Tio since he has 1,200 subs. Nice, that's a long time, back since like 2017. He's as legit as it gets. I'm a member of the Private Bear Den, and I've immediately benefited with the educational materials. Thank you, John. I couldn't ask for a more stunning recommendation. That I really appreciate your guys' support when you say stuff like that. It means the world to me. I love when people say BTC dropping. Oh my God. Oh, you like my shirt? I actually painted this myself. So just so you guys know, I do art nights every now and then. It's called Paint Don't Think, and this is my 2020 shirt. So you can see Arcane Bear 2020. And we've got Bitcoin. Wait, hold on. We've got Bitcoin and COVID. So this is my shirt that represents whatever happened in 2020, effectively, I guess. Thanks for the shout out. Maybe we'll auction off my shirts to give to charity too. Just messing around. I love that we can mess around, guys. Thank you. Okay, so again, let's go over a few more of your guys' thoughts and questions. Oh, snap! Another super chat for Kiva. I am Boomy. Okay, I am Boomy. Boomy. That's like a. Wait, Boomy. Is that a. Oh, what's the language? Like Satu Dua Lima Impat. What do you call the language of Bali? Balinese is that I am Boomy? Is that a Balinese name? Thank you for the $50. We will give that tomorrow to Kiva just because we gave to Kiva once today. I don't want to take up too much of the episode by constantly giving money to entrepreneurs. But thank you for the super chat. Tomorrow we will make another contribution to an underbanked and underserved entrepreneur around the world. Thanks to you guys. I really appreciate that. Tons of fun. Okay, more thoughts. You're just about to go over H-bar. Okay, I will go over to H-bar because you guys did ask, and I try to do my best to offer the value that you guys want. The best way is to drop a $50 super chat for Kiva like that, and then I will definitely go over it each time. Let's take a look here. Hedera Hashgraph on US dollar. We'll go with that, and H-bar. So we'll make a very similar long-term conjecture status just for fun. We don't have all the data since April or since March, but we can go here. Oh, there's 2020. Okay. So a lot of volatility in H-bar. Doesn't look too good to me. Only a 590% gain overall in terms of if you were to enter it in March. It doesn't even come close to just being in the major market movers. Again, one point Mike did have is that you could have been in Bitcoin and done better on the long term than being in H-bar this whole time. So on the short term, though, had you entered into H-bar recently, just as a short-term play, you're at around 160 with maybe 240% gains. I would be very hesitant. Again, anytime you see a horizontal trading range, a breakout, and then a backup, entering outside of this range is a little difficult. This was the primary spot to enter where there was very, very limited volatility, like such a thin spread. From wick to wick, what are we talking about? 30%. So not a great leverage trade potentially, but this is one of the things. Definitely don't enter the market this far out into the move. You're just going to lose money trying to jump basically from trade to trade effectively. So it's not a healthy way to go, especially when we've gone over like what venture capital should look like and what it means for the people that have hundreds of millions of dollars and how they play. Because even though you don't have maybe you do. I know some of you do actually. I've talked to some of the Private Bear members. Some of you do have hundreds of millions of dollars, but if you don't, you want to at least play like the people that do, because then you'll be more successful. Because what they do is almost like following a guru. You don't really want to know what the guru teaches you technically. You want to learn to walk like the guru, and then through time you get that same type of living experience. Bhumi is a Hindu goddess representing Mother Earth. That's what it is. Okay, so we visited a birthing center called Bhumi Sehat, which provides free medical services for women in Indonesia and Papua New Guinea, I think it's Papua New Guinea, and a few other countries. So I had recognized the Bhumi word before. I really, really appreciate that. Okay, I'm going to pretty much leave that at today's episode. I really appreciate your guys' support. Again, please like and subscribe to the channel by clicking that little bell icon. I want to get to 30,000 subscribers, and we're super close. So tell your friends and family to follow the Arcane Bear. I really love that we can do all these fun giveaways to Kiva, that we can help the underbanked and the underserved. It means the world to me. And Alessandra Lorandro says, love for the needy. Okay, so we've got $60 to give away to Kiva tomorrow. Thank you for that, Alessandra. We'll just keep loaning money to entrepreneurs via you guys. My accountant's gonna hate me for this one, but that's okay. Okay, nice, awesome, guys. What we're gonna do is we're just gonna ban people who hey, Let's Ride, can you just get rid of Mr. O'Yorkie there? He's nothing but a useless person. You don't need him. Don't need his comments in the chat. Sorry. By the way, guys, if you just decide to be useless in the chat, that's what we're just gonna do. I'm just gonna get rid of you. There you go. Bye bye, Mikey O'York. We don't need you in the channel. So hopefully that helps. Thank you guys all for joining us today on today's live stream. This is Teal with the Arcane Bear. I really appreciate your support for these live streams. I love doing this, and hopefully you guys like the short, succinct intro. So if you're watching the video later, you get the information you want right up front, and then for these live streams where we get to have this communication with each of you as well, just more and more valuable for the community during that live stream conversation. So thank you guys from the bottom of my heart. This is Teal with the Arcane Bear. I'm signing off for the rest of the day, and guess what I won't do? I won't leave the live stream running when I go to the beach today, so I don't have to drive back like a bat out of hell.